Let me ask you something. It's Thursday afternoon, payroll's due tomorrow morning, and you got a choice. Open QuickBooks and run a profitability report or check your bank balance. Which one are you actually going to do? Yeah, exactly. You're checking the bank balance. Every contractor does. And here's the thing nobody tells you, you're not doing it wrong. You're doing it exactly right. The problem isn't that you manage your cash from bank balances. The problem is your bank accounts aren't set up to give you the right answers. Today, we're fixing that. Walk into any contractor's office Thursday afternoon and ask them if they can cover Friday's payroll. They're not firing up their P&L statement. They're looking at their checking account balance because that's where the truth lives. This isn't sloppy management. This is construction reality. Your financial statements might show $50,000 in profit while your checking account can't cover $15,000 payroll. That profitable job on paper is not profitable until the money's sitting in your account, not tied up in retainage or stuck waiting on a change order. Traditional accounting treats this bank balance habit like a character flaw that needs therapy. Business gurus wave P&L statements around like the 10 commandments, preaching about managing by the numbers. Well, bless their hearts. They've never tried to make payroll when a customer is dragging their feet on a draw request. Here's what Profit First for construction does differently. Instead of fighting your natural instinct to check bank balances, it rewires those bank accounts so the balances you're already checking tell you the truth and enforce the right behavior automatically. Think of it like this: you wouldn't pour a foundation without checking level, you wouldn't frame walls without checking plumb. Why would you manage cash without accounts that tell you what's actually level and what's dangerously tilted? Profit First for Construction gives you a 5-step behavioral loop. This isn't complicated. It's designed for humans under pressure, not accountants in quiet offices. Accumulate. Income lands in your main holding account and stays there until your allocation day. No scattered spending, no, I'll grab a little for this one invoice. Everything pools first. Then you allocate. You move predetermined percentages to specific accounts in one disciplined act. JobEx gets its cut. Payroll gets protected. Overhead gets funded. Profit gets separated. No debates, no negotiations with yourself, just percentages and transfers. Order. Each account has exactly one job. JobEx money buys job expenses, period. Payroll money pays labor, nothing else. No cross spending, no exceptions, no I'll pay it back next week promises you won't keep. Rhythm. This sequence repeats weekly or biweekly, synced to when your cash actually moves, not some generic 10th and 25th cycle that works for retail but fails in construction. Temptation. The system itself makes the wrong choice inconvenient. When profit and tax accounts live at a different bank, you can't raid them as a reflex during a Thursday panic to cover payroll. This sequence removes decision fatigue entirely. Instead of staring at a spreadsheet trying to calculate what's safe to spend, the balance tells you what you can do, not analysis paralysis. No convincing yourself this one time is different. Generic Profit First teaches allocations on the 10th and 25th because that sounds professional and businesslike. That's retail thinking applied to construction reality, and it falls apart the first time draws come in lumps and payroll hits weekly. When your crew expects their check every Friday, your cash system better be ready every Thursday. The 10-minute allocation ritual keeps it simple. Bank transfers based on predetermined percentages, quick ledger entries to track the moves, dashboard check to confirm everything landed correctly. Done for the week. High discipline, low complexity, every single week. Let's do some back of the napkin math right quick. Say a $50,000 draw hits your account Monday morning. Instead of wondering all week if you can afford materials, you allocate Tuesday. JobEx, 35%, which is $35,000. Payroll, $7,500. That's 15%. Your OpEx is 10% at $5,000. Owner's comp, $1,500 or 3%. Profit is 1.5%, and tax at 0.5%. Now, the JobEx balance tells you exactly what you can spend on the job. Your payroll account covers this week and next. OpEx handles rent and equipment payments. Zero guesswork. The balance is the answer. Here's where Profit First Construction gets surgical. Every account exists to change what you notice and how you behave in the moment. JobEx. Your job expenses. This isolates every direct job cost: subcontractor materials, job labor, equipment rentals, permits, bonds, everything that flows out to build the actual project. Why this matters? When all your job spending has come from JobEx, overhead can't quietly rob job cash to pay the light bill. Your gross margin becomes visible in real time, not at month end when it's too late to fix anything. Quick math. If JobEx shows $40,000 and you got $60,000 left to bill on a job, you're trending around 33% gross margin. If JobEx shows $70,000, that same remaining $60,000, you're already upside down and you need to have some hard conversations with your customers or your crew today, not at month end. OpEx, your operating expenses. PFCC rescopes this to match cash reality. It excludes direct job costs, but includes cash outlays that don't hit your P&L, like principal payments on equipment loans. No more deceptive surpluses where your income statement looks great, but your cash disappears into debt service you forgot to account for. Payroll account. Separate funding protects your operating reserves, reduces fraud risk, and makes hiring capacity obvious. One glance at the balance compared to your weekly payroll burn tells you whether you can afford that next hire or if you're already stretched thin. Owner's compensation. Hardwired weekly or biweekly on the same rhythm as the crew payroll. Your pay becomes non-negotiable, funded consistently instead of skipped during lean weeks while you wonder why you are always personally broke while the business looks profitable on paper. Here's something every contractor knows, but most won't admit. Willpower fails on Thursday afternoon when payroll's due and bank balance is thin. You promise yourself you'll only borrow from the tax account this once. You'll swear you'll pay that profit money back next week. You convince yourself this emergency is different from all the other emergencies. And then Friday rolls around, you're grateful your crew got paid, but you just stolen from your future plans again. Profit First for construction treats temptation control as a design requirement, not a nice to have. When your profit and tax accounts live at a different bank, that Friday afternoon raid becomes logging into different system, answering security questions, and maybe even waiting for a phone verification or a transfer delay. That extra friction, just a few minutes of inconvenience, breaks that reflexive action. It gives your better angel time to win the argument with your panicked angel. You're not relying on willpower anymore. You're relying on structural inconvenience. Think about job site safety. You don't wear a hard hat because it's comfortable. You wear it because the system demands it, and the system keeps you alive. PFCC's account structure keeps your cash flow alive. Using the same logic, make the safe choice the easy choice, and the dangerous choice inconvenient enough that you pause before you make it. Here's where this gets really powerful. Those account balances stop being just numbers and start being strategy dials you can adjust. If JobEx constantly runs hot while OpEx starves, that's not a budgeting problem. That's a pricing signal. Your overhead percentage is set wrong, or your job costing is wishful thinking, or you're taking jobs that don't cover the actual cost of being in business. Don't solve that by rating your profit or tax. Fix your bidding or cut your fixed costs. If your payroll account balance divided by your weekly payroll equals less than 2 weeks of runway, you're one customer delay away from a crisis. Believe the math. That balance just saves you from a hiring mistake that would have stressed every other part of your operation. When OpEx includes principal payments on debt, you can see your true cash capacity for overhead and equipment obligations. No more surprise shortfalls because you forgot the skid steer payment hits this month. Backlog coverage and seasonality buffers can be built deliberately by adjusting allocation percentages. Slow season coming, bump up the reserve percentages while cash is flowing. Big projects starting, make sure your JobEx allocation matches the front-loaded costs before the first draw hits. Your bank balances become operational intelligence, not just financial reporting. They tell you what's coming, not just what happened. Let's walk through this in real time. It's Tuesday morning, a $75,000 draw just deposited in your main checking account. You run your 10-minute allocation ritual. Minute 1 to 5, you allocate. Your JobEx, 70%, 52,500. Payroll is 15%, so that's 11,250. OpEx, 10%, $7,500. Owner's comp, 3%, $2,250. Profit, 1.5%, $1,125. Tax, 0.5%, $375. Minutes 6 to 7, that's temptation control. You're going to transfer your profit and tax to a separate bank account immediately. Out of sight, out of Thursday afternoon's reach. Minutes 8 and 9, your job deposits. You got customer with a $10,000 fixture deposit, go straight to your materials pre-buy account. Protected and earmarked for exactly what the customer paid for. Minute 10, dashboard check. Just glance at all your balances, up to your simple tracking sheet. Confirm everything's landed correctly. Total time, 10 minutes. Total thinking required, 0. The percentages were predetermined. The counts are already set up. The ritual is muscle memory. Now, decision-making is instant. Can we order $30,000 in materials? Check JobEx balance, $52,500. Yes. Can we hire another carpenter at $800 a week? Payroll balance is $11,250. Current weekly payroll is $6,000. That's less than 2 weeks of runway. Probably not yet. Can we replace the old excavator? OpEx balance of $7,500 won't cover a $2,500 a month payment plus the other overhead. Wait or find a cheaper option. The balance is the answer. No spreadsheet required. No analysis paralysis. No convincing yourself this one time is different. The mindset shift that's locked in the system. Profit first for construction requires 3 mental switches that make everything else automatic. Believe your balances. When JobEx is short, the project is short. Don't solve the cash problems by rating profit or tax. Fix the underlying issue. Bidding, scope creep, schedule delays, whatever's really causing the shortage. The balance is telling you the truth. Listen to it. Protect purpose with separation. Every dollar has a job. JobEx pays job costs. Payroll pays labor. OpEx pays overhead. Profit stays profit. No exceptions, no emergencies, no creative solutions. When you start mixing accounts, you already lost the game. Consistency beats complexity. The weekly ritual and predictable cadence matter more than perfect allocation percentages or sophisticated reporting. Your most critical financial habits need to be automatic and on time, not perfect and complicated. This isn't a filing system, it's a behavioral program disguised as accounting. The accounts train you to see cash flow clearly and spend money purposefully, even when you're stressed, rushed, and running on coffee and determination. Think of it like blueprints. Your balance sheet should read like construction drawings, clear enough that anyone could build from it. When every account serves a purpose and every balance sends a signal, profitable behavior becomes as automatic as checking for level before you pour. The bottom line. Your bank balance already makes real decisions. You already manage this way. PFCC just designs those balances to make good decisions automatically instead of hoping your willpower holds when the pressure's on. 3 lines of math will tell you more truth than 30 pages of projections. JobEx balance minus your remaining scope equals real gross margin trend. Weekly payroll equals cash runway in weeks. Your OpEx balance is fixed monthly costs equals available for equipment and growth. Stop fighting your natural instincts and start using them. PFCC takes the financial habits that got you into contracting and turns them into a system that keeps you in contracting profitably. The difference between contractors who make it and contractors who flame out isn't education or intelligence or even luck. It's whether their cash management system works with their behavior or fights against it. Bank balance accounting works for how you actually operate. Profit first for construction just makes those balances tell the truth and enforce the right actions automatically. If you're tired of feeling cash poor while your P&L says you're profitable, if Thursday payroll keeps giving you that sick feeling in your stomach, if you know you should be making more money but it keeps disappearing somewhere between the job and your personal account, this system is for you. Grab the book, Profit First for Commercial Construction on Amazon. It walks you through setting up these accounts, calculating starter percentages, and running that 10-minute allocation ritual so it becomes so automatic as morning coffee. Or visit profitfirstconstruction.com and schedule a call with our team. We specialize in helping contractors implement the system without disrupting your jobs or your sanity. We've done this with hundreds of contractors. We know where you'll get stuck and how to fix it. And if you got value from today, hit that subscribe button. We put out practical, no BS construction cash flow content every week, the kind of stuff that they don't teach in business school because business school professors have never tried to make payroll on a Thursday afternoon when a customer's check didn't clear. Your bank balance is already smarter than your spreadsheet. Let's make sure it's telling the truth. I'm Wade Carpenter. Thanks for watching.